All right, let's get into a discussion here and some technicals on Tesla. The EV maker is supposed to release a lower priced model here. Stock's pulling back here in today's session on it. I'm hearing some rumors out of Electrico that maybe it's only going to be $10,000 cheaper than the other Model Y, and maybe that's not a good thing. We want a lower price model. But Rick's Ducat, our lead market technicians here, break down some charts here in Tesla. Nice rebound here from those April lows, Rick, but go ahead and break it down for us.
The EV space has certainly been a major focus lately as some of our credits have been unwinding here. And, there's all kinds of other concerns. Lithium supplies. I could go on for a while here. But if we look at Tesla's performance specifically, up strongly versus the consumer discretionary sector and the S&P 500, Tesla's up about 88%. Consumer discretionary is pretty big, though. It's not super useful of a comparison for Tesla. So what if we look at it versus the legacy automakers here versus GM and Ford and Toyota and Stellantis here? Once again, the top of the pack here, leading the way here. But, this space here, the CEO of Ford recently had some pretty concerning comments about the Chinese electric vehicle makers versus the American ones. They said that China is the 700-pound gorilla in the room, and that even though for now Tesla's outperforming these stocks like XPeng, NIO, and Li, he just really highlighted the difficult situation that they face versus these competitors here. But if we were to look at our chart more specifically of Tesla, we can see a gradual acceleration to the upside has given way to a very steep jump upward here. The 400 level, our dark green line here, stands out as an old gap here. So that's where price, may pull back to here. That's about in line with where we had another small gap in the post gap up lows here. Didn't quite make it too far above 463. That was the site of some of our best closes from previously in the year, all the way back here. A quick look at some of our other technical studies here. We can see that the volume profile point of control comes in right around here with that heavy breakout area we highlighted near 350. So that's a key area to the downside, but pretty far away at this point. Meanwhile, our lows came in right around this volume node near about 420 or so, which also lined up with our yellow 21-day exponential moving average as well here. So that was a supportive area.
All right, you got the technicals. Now let's take a look at an example trade here in Tesla. Stock pulling back about $5 here in the pre-market around 448, Rick.
Sure. So we could see that I was thinking about an iron condor here for our trade here because of our expected move area. These break-evens line up quite closely with what the options market is looking for over the next 10 days or so here. So -1 October 17th, 490, 495, 410, 405 iron condor here, shooting for maybe a 165 credit. It can be hard to gauge where this might be when the market opens up here. So take that with a grain of salt, maybe adjust it accordingly here. Roughly 1 to 2 risk reward here, so a bit more aggressive here. But this is a trade that will expire before the earnings event. I believe it's October 22nd here. Yeah. So trying to take advantage of this volatile time for this sector here before we get the big event risk situation of earnings. So risk-defined trade, that's often something we like to employ here because you're unable to lose more than that max loss of 335 here if things really do go haywire.
Yeah, like nice big range between 408.35 and 491. Selling the out-of-money call vertical, selling the out-of-money put vertical. Neutral strategy and higher implied volatility going into this auto release. All right, great stuff. Thanks to Rick Ducat, lead market technician.